Choosing a company car isn't just about the badge on the bonnet, it's a financial decision too. The wrong choice could leave you with a hefty tax bill, while the right one could save you a bundle. With the rise of electric vehicles, the tax landscape has shifted, making the decision even more crucial. For company car drivers, understanding the tax implications of their choice is paramount. In this battle of the engines, we'll pit a sleek Tesla against a powerful diesel Mercedes E-Class, dissecting the tax implications for both the company and the driver. Buckle up, it's going to be a bumpy ride. Before we delve into the specifics, let's understand how company car tax works in the UK. There are two main taxes to consider: benefit in kind (BIK) tax and corporation tax. Benefit in kind tax is levied on employees who have a company car available for private use. The amount you pay depends on the car's CO2 emissions and your income tax bracket. Lower emissions generally mean lower BIK tax. Corporation tax allows companies to deduct a portion of their company car costs from their profits before paying corporation tax. The amount deductible depends on the car's CO2 emissions. Again, lower emissions generally mean higher deductions. Today we dive into the world of company car tax and compare two popular choices. Let's put our contenders head to head and see how they fare on company car tax. We'll explore the financial implications for both the employer and the employee. First up, the Tesla Model 3, an electric vehicle that has been gaining popularity for its efficiency and eco-friendliness. For BIK tax, electric cars currently enjoy very low BIK rates, typically around 2%. This is a significant advantage for employees. This means you'll pay a significantly lower tax bill compared to a petrol or diesel car, making it a cost-effective choice. For corporation tax, businesses can claim 100% first-year capital allowances on electric vehicles, which is a substantial benefit. This means they can deduct the full cost of the vehicle from their profits in the first year, leading to immediate financial relief. This translates to significant tax savings for the company, enhancing their overall financial health. Now let's look at the Mercedes E-Class, a diesel vehicle known for its luxury and performance. For BIK tax, diesel cars attract a higher BIK rate than electric cars, which can be a significant drawback. Typically, these rates range between 25 and 37%, depending on the specific model and its CO2 emissions. This will result in a significantly higher tax bill for the employee compared to the Tesla, impacting their take-home pay. For corporation tax, while businesses can still claim capital allowances on diesel cars, the benefits are not as substantial. The amount is significantly lower than for electric vehicles, reducing the overall tax relief available. This means less tax relief for the company, making diesel cars a less attractive option from a tax perspective. But the tax implications don't end there. As a company car driver, you'll also need to consider the personal tax implications. Income tax. The BIK value of your company car is added to your salary, increasing your taxable income. This means you'll pay more income tax if you have a high-emission vehicle. National insurance. Your employer will also have to pay national insurance contributions based on the BIK value of your company car. Let's crunch some numbers to see how these tax differences play out in the real world. We'll look at a practical scenario to understand the financial implications better. Scenario: a higher rate taxpayer, earning over £50,270, chooses between a Tesla Model 3 and a diesel Mercedes E-Class. Tesla Model 3, BIK tax. Assuming a BIK rate of 2%, the annual BIK tax liability would be around £800. This is a relatively low amount, making it an attractive option. Income tax. The additional income tax payable on the BIK value would be around £320. Now let's consider the Mercedes E-Class BIK tax. Assuming a BIK rate of 30%, the annual BIK tax liability would be around £12,000. This is significantly higher than the Tesla. Income tax. The additional income tax payable on the BYK value would be around £4,800. This adds a substantial burden. As you can see, the Tesla Model 3 results in significantly lower tax liabilities for both the employee and the company compared to the diesel Mercedes E-Class. This makes the Tesla a more cost-effective choice in the long run. From a purely tax perspective, the Tesla emerges as the clear winner. Its low BIK rate and generous capital allowances translate to substantial tax savings for both the company and the employee. The diesel Mercedes, on the other hand, comes with a hefty tax burden. While tax is a crucial factor, it's not the only consideration when choosing a company car. There are several other elements that can significantly impact your decision. Practicality. Consider your driving needs and lifestyle. Think about the type of journeys you frequently make. Do you regularly undertake long journeys or need a car with a large boot? These factors can influence the type of car that will best suit your needs. Charging infrastructure. If you opt for an electric car, ensure you have access to reliable charging infrastructure at home and at work. This is crucial for maintaining convenience and efficiency. Overall cost factor in the purchase price, running costs and maintenance expenses of each vehicle. These costs can add up and affect your overall budget. Ultimately, the best company car for you will depend on your individual circumstances and priorities. It's important to weigh all these factors carefully, but one thing is clear. The tax landscape is changing, and electric vehicles are emerging as the financially savvy choice. They offer both environmental benefits and potential cost savings.